The Supreme Court just struck down Trump's sweeping tariffs. Markets reacted instantly. Stocks jumped. The S&P 500 bounced. Headlines started turning bullish. Everyone's cheering except for Trump because he's got a backup plan, which is a new 10% global tariff that he plans to evoke effective immediately. So what's actually happening around here? Did the market just dodge a trade war, or did we just trade chaos for inflation risk? What's good, YouTube? Julian here, and we've got a huge week ahead, so let's break this down properly. Let's go.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
So in case you've been living under a rock, let me refresh your memory on what these tariffs actually are. Let's go back all the way to April 2025, what Trump calls Liberation Day. Now, if you remember, that was when he actually imposed the 10% baseline tariff on almost all US trading partners. Not just that, he even layered an even higher reciprocal tariff on dozens of nations, all in an effort to narrow down the US trade deficit. These tariffs were imposed under something called the International Emergency Economic Powers Act, or the IEEPA. The IEEPA is traditionally used for sanctions, national emergencies, not broad trade policy. But since Inauguration Day, Trump evoked this tariff on Canada, China, Mexico, which were America's largest trading partners, citing drug trafficking concerns. Now, here's the part that surprised many people. Was it effective? In terms of revenue, yes. The US Customs collected roughly $133.5 billion in tariff revenue under the IEEPA across fiscal year 2025 and into fiscal year 2026 through mid-December. Now, this is massive, which is why the Supreme Court ruling matters. The Supreme Court struck down a large portion of these IEEPA tariffs, stating clearly that the law does not authorize the US president to impose tariffs. Obviously, Trump wasn't happy.
What the hell was that all about?
Tariff was a central part of his strategy, and he had asserted authority to impose them quickly without having congressional approval. Now, here's where things get messy. The Supreme Court did not explicitly rule out whether the government must refund the tariff money that has been collected, and this is a very, very big sum. We're talking about up to $175 billion in refund claims. This is also not automatic. This doesn't mean checks are being mailed out the next week. Experts have said that the importers must file individual refund claims. Smaller companies may not even bother because of the high legal costs. Litigation could stretch for years and years, and consumers won't directly see refunds because the tariffs were mainly paid by the importers, not shoppers. So yes, the potential liability is huge, but the timing is uncertain, and this is a very, very messy process. Trump himself said that he expects a multi-year litigation over refunds. This is completely expected of him. Now, what does this mean for companies? In short term, I would say positive. Let's take Apple for example. Apple reportedly spent over $3 billion on tariffs since Trump's trade policies were enacted. If those emergency tariffs were invalidated, Apple could see lower production costs, preserve their margins, and also face less pressure to shift supply chains aggressively. Less tariff friction would also mean more earnings visibility, and Apple isn't alone. There are many multinational companies benefiting from the reduced unpredictability. But this is also where people are oversimplifying, because tariffs didn't just disappear, they evolved. And this is leading me to the next part of the sharing, which is Trump's backup plan. Now, after the Supreme Court defeat, Trump pivoted immediately.
Okay.
He signed an executive order imposing a new 10% global tariff under Section 122 of the Trade Act of 1974. Now, if you're confused, let me simplify this. There are three key tariff tools here. First of all, the IEEPA. That was what we talked about earlier. That is the emergency authority. That's the one that the Supreme Court shut down. Next, secondly, we have the Section 301. Now, this primarily targets China. And under Section 301, the US imposed tariffs after investigating an unfair trade practice. So the current structure on China would be 25% tariffs on large categories of imports, and some other goods are given a 7.5% tariff. Now, this remain legally valid. They were not struck down. Thirdly, we have Section 122. This is Trump's new fallback tool. It allows up to 15% of tariffs for 150 days without having a lengthy investigation. Now, this is where the new 10% global tariff that Trump chooses to come from. This is broad, this is temporary, is structured. Now, I want to talk about China specifically. Previously, China was facing a 25% tariff under Section 301, plus two separate 10% tariffs under IEEPA. Those IEEPA tariffs are now invalid, but instead of China dropping back to just 25%, they are now being replaced with new 10% global Section 122 tariff. So China's effective tariff rate becomes 25% from the Section 301, 10% from Section 122, and this equals to 35%, bringing China's total tariff to 35%. So no, China doesn't escape tariffs. It shifted from the emergency-based tariffs to a structured 35% effective rate under a different legal authority. So this is not de-escalation. This normalization is at a high level. And that's why this story isn't just as bullish as the initial stock reaction suggests. So to summarize, the Supreme Court stopped Trump from using emergency powers to impose tariffs, but the tariffs didn't go away. They switched to a different legal tool. So what should we be watching right now? First up, interest rates. Now, if this new 10% tariff makes price rise again, inflation will continue to stay high. And if inflation stays high, the government keeps interest rates higher for longer. And when the interest rates are high, tech stocks usually struggle because investors don't want to pay high prices for future profits when safer investments start paying more. Secondly, company earnings. The next time company reports their results, I want you to pay attention very carefully. If they mention the word tariff impact, it means costs are rising. If costs rise and companies cannot raise prices, they will automatically make less profit. And stocks don't like shrinking profits. Thirdly, inflation data. Now, if inflation goes up again, hopes for rate cuts get delayed. And a lot of this market rally has been built on the idea that rates will fall soon. So if that changes, stocks can react fast. And also, don't forget geopolitics. China is still facing heavy tariffs. Tensions with Iran right now can push oil prices higher. Higher oil means higher prices everywhere. And higher prices will also mean more inflation pressure. So this wasn't the end of the tariffs. It was just a change of strategy. The real fight is about inflation, interest rates, and company profits. That is what will decide the next big move. So look at the charts right now. You can see this is the S&P 500. We're going to start off with this. And the S&P 500 has been looking pretty good so far after the last week. And you can see right here, the US stocks have been increasing, have been pretty bullish because of the latest news from the Supreme Court. If you checked out my previous video, this was what I actually talked about. So right here, you can see that this is where the markets are at right now. In order for it to want to go up, it has to break past this level of resistance so that it can go up back to the all-time high. Again, this is something that I foresee may be able to happen because of the strong bullish pressure that is shown to have closed on Friday. And even if you look at the weekly, you can see that it still looks pretty strong as well. So I want to see a continuation of a push to the upside so that it goes back to the all-time high again. And the upcoming week is going to be important because I want to see whether this area is able to break or not. Right now, we have been testing the resistance for a very, very long time, 5 times already, but it's still unable to break. So let's see whether it is able to continue that or not. Also, we have some important news which is coming up in the coming week. Right now, this week, we actually do have, let's have a look. President Trump speaking on Wednesday. This is going to be at 10 a.m. We have unemployment claims and we have also PPI on Thursday and Friday, respectively. And coming to that, we also want to look at what's happening to the CME Fed Watch. You can see that the CME Fed Watch tool is actually looking at a very, very solid 96% of no rate cut for the upcoming FOMC on 18th of March. So I suspect that this is going to continue, which again, this is usually something that we already expect pretty much. It isn't until I would say the 17th of June, whereby the rate cut would be a little bit more promising, which is 45%. If you look at the 29th of April, you can also see that the probability of a rate cut is also not very strong. It's just 17%. 82% just still remains that there's not going to be a rate cut. So I would say that this might not push the S&P 500 far enough to break this resistance. So this is what I see for now, right? Right now, we also want to look at the VIX. VIX has also been coming down a little bit. Before that, on Friday and also a couple of days before, it was actually pushing pretty high. So let's see whether the VIX or the volatility can actually continue to go back down. Next, let's look at SOXL. SOXL has been pushing up high as well. So it's still been going up and trying to break past this resistance. This is where it's headed right now. So let's see whether it's still able to break it. Right now, it still looks like there is a strong chance since the week ended up really, really bullish for SOXL. So I do hope that it can break past this barrier of, I would say, 69.70 to continue going up higher. Next, let's look at some companies. So I want to take a look at Apple first. Apple, right here, you can see Apple ended up the week pretty strongly. Sorry, Thursday, the previous week, it has actually stumbled down, right? Broke through actually not two, one support right here, bringing down to the next support. Right now, it has been playing sideways. You can see right here, it's approaching back this resistance at around 267 to 270. So let's see if it's able to react and break and even go higher. I do suspect that in the short term, companies will likely push up because of the ruling of a reduced tariff, but also because of the additional 10% tariff, it now creates some uncertainty. So let's see how it will actually react to that. Next, let's look at Google. Google has also pushed up very high. You can see right here, it ended up the week pretty strong bullish, right? So I do expect that it will continue pushing up all the way until this next area right here. So this is what I see for Google. Let's have a look next at Microsoft. Microsoft not looking too good. Microsoft is still hovering around this level of support right here. It did try to go up, but unfortunately didn't manage to. So it's right back down here. So I'm looking for Microsoft to continue going upwards. I want to see it head up strong. Because if it doesn't, there's a high chance that it may break and it may go down a little bit more. So this is not going to be looking too good for Microsoft investors. Next, let's look at Tesla. Tesla has been hovering between this level for a very long time. Right now, still playing sideways between this level of support and resistance. So yeah, I would say that in order for Tesla to want to go up, even though Tesla has been talking about a post Cybertruck launch, right here you can see that it was affected by the Florida appeal loss over a $234 million judgment. And Tesla has also been said that they want to actually stop Model S, and Model X is going to be focusing more on robotics and autonomous vehicles. So again, this sounds like a good plan for Tesla. And let's hope that, if you're a Tesla fan, you want to hope that this continues to give more confidence to the investors so that price will continue to go back up. Now let's look at Amazon next. So Amazon is trying to push up. Right now it's at this next level of resistance. I want to see it push up higher, which there is a huge possibility because this is a gap right here. And usually price looks to fill out the gap. So I'm seeing that there's a possibility for Amazon to push up, come out and fill this gap. I would say then it will see what needs to happen. If it's able to push up higher, it will fill the next gap and continue going up. But if not, then it will come back down. Right here, you can still see another gap that has yet to be filled. So there is a chance that Amazon would be able to break past this and break past this to go even higher. Next, let's look at Nvidia. Nvidia has been pushing up pretty strongly. It's right now in the middle of this support and resistance level. So I want to see it continue pushing up back to this level right here, which would still be the next resistance. It's still unable to break it, even though it has tried to, reach that area for quite some time. So let's hope for Nvidia to continue going up. All right, Meta. Meta has been bouncing between this level of support and resistance. Again, you can see price pushes up, go back to this resistance, and right now it has to decide on what is going to happen. Since it can't break the resistance, or if there's not enough buying pressure, it will continue back down to this level of support. Let's look at Palantir. Palantir seems to be playing within this level. I still think that Palantir has a lot of room for it to move. Right now, it also seems very possible that it can come down to this area right here. So maybe what we can say is that there's going to be a dip before it pushes all the way up. I'm hoping that it comes down lower a little bit so that I can personally look into getting some more Palantir shares, but that's just me. But who knows, right? If there's a chance, then we can grab more shares right here. If not, then if it goes up, well, it's still fine because, shares going up is always a good thing. Right, I want to have a look at Bitcoin right here. So Bitcoin is still playing in this area right here. On the weekly, it doesn't seem good since it's still showing 1, 2, 3, 4, 5, 5 weeks of strong bearish pressure. I want to see that it's able to hold this level of support for it to continue going up. Right here, you can see that on the daily, it's still showing a channel going downwards. So it's literally compressing and playing this way, right? So in order for it to go up, it really has to break through multiple levels of resistance. If I just draw it kind of like that, you can see very clearly that a breakout needs to happen for it to go up higher. Let's look at gold right now. So gold would be here. Now gold is pretty interesting. I would say if you've been following me for some time, you will know that I've talked about gold being bullish. If you look at the weekly, you can clearly see that this resistance right here, gold has been pushing up higher and higher, right? This was a clear sign because gold pushed up above this resistance, closed above this resistance last week. And actually, this was the week before. And last week, it maintained its bullishness. So this clearly tells me that gold wants to continue going up. If you look at it from the daily perspective, this is the daily resistance. And what happened is that on Friday, it actually closed above the daily resistance. Again, fueling, right? That fueling the confidence that I have that gold is continuing to push up higher. However, it doesn't mean that when I say gold is going to push up higher, it will immediately spike up and go all the way up. There's always a chance for a retracement. So for me, I'm going to be focusing more on buys personally for gold, but I'm waiting for a retracement before I continue entering in for buys for gold. But from the looks of it, gold seems to be pretty bullish, and that's what I see from the technical analysis perspective. Now, looking at silver, silver looks also to be pretty bullish. Let me just have a look. From the daily perspective, right now, it is actually, did it close above? Yes, it actually closed above. So silver closed above the daily resistance, so it has a high chance of going up as well. There's another daily resistance over here. So silver has to break past this. So it's close above this, right? But it has to come up to this next level of resistance on the daily. So if it's able to break this area as well, then only it can continue its way up and hopefully go all the way up back to here. So let's see what happens to silver as well. So this wraps up our market analysis for this week. I know there was a lot to cover, but hopefully this has helped you give a better understanding about what to expect for the coming week. Again, if you like videos like this, help me out by liking and subscribing because this means a lot to me. and it helps this channel grow even more as well. And if you want to be able to see how I scalp gold right at this present time, especially since gold keeps going up, just watch the video right around here, and I look forward to seeing you guys in the next video. Bye bye.